Guys, if you're looking for the hot stock and option trades for the week, you came to the right place. In this video, we're going to break down high probability trades, the market performance last week, interest rates, the fear and greed index, where we are in the market, and we're going to jump into the trades on the live option trading platform. So you're going to see exactly what I have on, and there's some hot trades this coming week, super buys. So whether you're a new investor, trader for options, or trader just looking to level up your game, we've got something for you in this video. So be sure and smash that like and subscribe button down below. That's all I ask. Let's smash that like button. It really helps to get the video out to more people, and I appreciate it very much. So let's jump into it. Wall Street continued its rally as the S&P 500 reached new highs last week. Strong performances in consumer staples and tech heavyweights bolstered the returns. Last week, the U.S. large-cap equities rose 2.4%, mainly fueled by dovish signals from the Fed Reserve, more clarity on tariffs, and upbeat earnings reports. Consumer staples led the sector gains up 3.7%, while retail stocks rode the wave of solid sales and bullish investor sentiment. Economic headlines were dominated by inflation and interest rate speculation. Producer prices surprised to the upside, climbing at the fastest pace in 3 years and raising questions about the timing and size of expected Fed rate cuts. Despite this inflation, most market participants now anticipate a quarter-point interest rate reduction in September, especially after weaker jobs data and increased hopes that additional cuts may follow before the end of the year. Investor sentiment leaned bullish. The CNN Fear and Greed Index sat at 64 on the end of last week on Friday. And that really signals a sign that the risk appetite is strong despite macro uncertainties. So year to date, the index has averaged near neutral, but last week's spike reflected optimism about rate cuts and record equity valuations. All right, guys, here's the sector Spyder tracker for last week. You can see we're on the 5-day. And communication services was up. Healthcare was up big, 4.65%. And you know what you can do is, this is XLV, the ETF, but if you click on the down arrow right there, you can see the top holdings of XLV. And United Healthcare was up big, 21%. Wow. It was down so far, and that's one that we're long on going forward. But you can see all the different healthcare stocks. Eli Lilly had a big week as well, and we're going to cover that one. The Fear and Greed Index is at 64, so as we just indicated, that's up. So investors are thinking, getting a little greedy out there. So there's some great buys this week that we're going to cover. Interest rate cuts, there's a 92% chance of a quarter-point adjustment down next on September 17th, next month in September, and then continued cuts throughout the rest of the year. So let's jump into the trades on the platform. This is the Tasty Trade option trading platform. There's a link down below. It's my favorite platform brokerage, and there's some benefits if you go through my link. The first one we're going to talk about is ACHR Aviation, ACHR. And if we look at the trades that we have on, I've got 3 leaps options and 3 short calls against it. So poor man's covered call, pretty much my favorite strategy, bullish strategy, because you can collect money when the market moves up and down. So we collect on the way down if it pulls back on the short calls, and we can control close those out. We were already at $72 profit on the short calls that are 12. We had a big move down, or 1.66% on Friday. So we're at 72. I may look to close those 3 out the start of next week if we are down further. I like to close the short call position at 50% of the gross or the total profit, and we're almost there. So ACHR, the current news with ACHR, the stock slipped after earnings, partly due to high spending and slower than expected revenue. So investor optimism remains due to the positive test flights and advancing manufacturing for their Midnight aircraft. As far as the future goes, as long as they continue to secure the partnerships that they have, it's going to go up in value. They do the electric vehicle takeoff and landing, eVTOL is the acronym. And they've got partnerships with United Air, Palantir, Anduril, all the big defense companies. Their competitors, Joby, and that's part of the reason as well. I think Joby's doing real well, and there may be some that prefer Joby over Archer, but I like it. The EV takeoff and landing is expected to grow 35% annually through 2030. So great sector. I think the stock's headed to 20. It's at 9.82 right now. And you can see the chart. Actually, I may need to go to my other charts here. Let's go. Yeah, let's do that. If we look here and we go to Archer. Okay, you can see we had a move up, and now we've been consolidating and in a range. And this is the this is the 1 year or 1 day, single day, 1 year. So we're going back. You can see August of last year right here. We had a big move up and now consolidating. So this is a great chart. Actually, really love it. And we're right below the mid level of the Bollinger Band. These are the the Bollinger Bands moving forward. So I like where we're at. For some reason, my stock chart's not working on Tasty Trade. AMD is the next one that we're going to talk about. And to me, huge buy. I closed out my short calls, and you can see I've just got 3 leaps on with the stock at 177. This has been one of my favorite trades. I think it's going to be going forward. They've got a 30% CAGR in AI gaming and embedded. It's growing. They've got the MI350 now that's out, and MI400 next year, 57% year-over-year growth in data center. So it is huge. They only missed the last earnings due to the MI308 sales restriction to China. So that was a buy the dip opportunity in my opinion. So any move up, I will go ahead and any move up I'll throw on and sell some more calls against my my leaps options. So you don't use any additional buying power when you are selling calls against your leaps. So just like owning the stock outright, 100 shares, instead of owning the 100 shares, we can control the same 100 shares with a leaps option. So again, if we go out to September of next year, and we throw on you can do the 170 for $40, and so that's really $4,040 since one contract controls 100 shares of stock. And mid price, you can go. So you're paying $4,030, and we've owned this and the right to buy at the 170 strike out through September. So almost 400 days, 397 days to expiration. So it's going to capitalize on any price appreciation in the stock. If we go to curve mode and then analysis, this is what I love about the Tasty Trade platform. You can see, just like owning the stock outright, it continues your profit and loss, your P&L in the green area continues to move up. If it got to 240, we would make $16,372 on this $4,000 investment. So love this. If we go back to the table mode, what I do is always when I open a position is I will sell a short call against it. So I would sell, if I were to open a position now, the 190 call, the 33 delta, and collect 490. So almost $500. Watch the price come down to 3,500 if we do that. Yep, 35.37. So 3,500 versus if we bought the stock outright 100 shares, we're looking at 177 times 100. So 17,751. So less than 21, or less than 20% the cost to control the same 100 shares, and we can collect this $500 every month, and that would cover this $3,500 buy in 6 months. So we can control 100 shares of stock for free in 6 months. That's what I love about the leaps and poor man's covered call. I won't do this on every trade, but I like to do it on one just in case there's new viewers. So AMD, great buy right now. They've got, I think they could test 200, 250. Actually, they're headed to 200 next. They're at 177. They've got strong buy recommendations by the analyst, and Lisa Su, the CEO, is great. All right, so the next one that we've got on is CRM, and this is Salesforce, and it's been down. Let's look at Salesforce, the chart. Yeah, so bottom end, we can go back. I like to look at the long-term charts and see, but we're at the bottom end of the groove, the trend that they're in. So great buying opportunity in Salesforce. They do have earnings coming out. Let's take a look on the trading platform, see when that is. If you look over here on the left, we can scroll. I've got it set up, okay, 9/3, so September 3rd after the bell, they have earnings. But I've got 2 put credit spreads, so as long as we stay above 240, which we're at 242 right now. If we go to the trade page, curve analysis, and then we go back a little, you can see we're in that profit zone right now. All right, guys, the next one is CoreWeave, and I've got, you can see multiple put credit spreads as well as a call credit spread at 120, so trading both sides of the market, and these are in September. And for CoreWeave, there was a big pullback, and everybody panicked last week. Let's look at you can see on TradingView, the pullback in the stock. The lockup period for selling stock for owners of it prior to, because of the IPO, just expired. So they had to, a lot of people took profits, sold their stock, and I think you're going to see them buying back in as well at these lower levels. But I'm not at all worried about CoreWeave. They had a 420% revenue jump in the first year. They've got contracts multi-year with the biggest names in AI. They've got a huge $26 billion backlog. They've got partnership with OpenAI. NVIDIA invested $100 million in CoreWeave. So do you really think that the investors are going to let CoreWeave go belly up? I don't think so. In the AI market and the data center build out, what they're involved in, it's a no-brainer for me to stay long. And we've had some guys come out and do videos that were very bullish on the IPO, and that now all of a sudden they're panicking and they're saying sell. But no, to me, this is a total buy opportunity for CoreWeave. If you look here, actually the Yahoo Finance is kind of the same thing. Everybody's skeptical, but they're growing, they're scaling, they're investing, and you can hear it on the conference call, the CEO's confidence in the future. But the AI infrastructure is able to handle both AI training and inference workloads, and that's important because the eventual shift is more towards inference, which CoreWeave really helps with. And it's expansion. It has expansion agreements with OpenAI, and it says 2 important hyperscale customers. It doesn't say the other, but they're working with all the big guys, and it's seeing increasing demand from companies in non-tech sectors. So demand is currently outstripping supply. Growth is not a problem. So that's why I'm not worried about the stock price, and the fact that lockup period just expired. That combined with this and higher expected spending, yeah, if you're growing, you're going to spend and scale. But you can see they don't have the luxury, so this is a negative for them, of the big 3 players, Amazon, Microsoft, and Alphabet, with both scale and other strong businesses to provide cash flow. But again, guys, I'm not worried about the cash flow with these guys. If we go here and let's look at the balance sheet. Let's see if it comes up, the financials here. But I think they've got plenty of cash, and they can raise cash so quickly. But yeah, you can see their income statement and their balance sheet. So they're going to be okay. their profit margins are big. It doesn't have it listed here. But I'm not at all worried about CoreWeave. So let me know. Are you guys panicking and selling? Or are you holding on long term? Let me know in the comments. All right. Next one. Let's move on. Eli Lilly. I think this is a huge buy right now. 700. I've got. I actually closed out my put credit spreads for profits last week, and it's down, and I've got a leaps option on. So I bought a March 215-day leaps, and I sold a 700 call against it. I'm gonna have to roll that up. It looks like next week, but Lilly is doing very well. They recently reported strong quarterly earnings driven by high demand for its diabetes immunology drugs along with Alzheimer's. And its pipeline's super strong. They've got late stage clinical data boosting the confidence. And let's see. My other notes on Lilly. Yeah, 2 years earnings per share growth is 52%, and they had a double beat and guidance increase. So, yeah, super strong Lilly. Let's look at the chart here real quick for Lilly. LLY is the ticker. Wow, I'm big that they had that big drop, but from here, to me, I'm long leaps option. You could do put credit spreads as well, but I love Lilly right here, and they've got a big dividend as well. All right, next one I think is MRVL. Still a strong buy right here. I've got leaps options, and I've sold calls against them, and at $76, my target for MRVL is 105, so much higher than where it is right now, and the outlook is very good for Eli Lilly. They've had strong buys and ratings, and then as far as earnings, they've beat as well. Let's see what we've got. Let's just punch that in real quick and look at the earnings, or see if they beat this last time for if we look at MRVL, then we can go right here to the analyst. They're, yeah, last 3 quarters beat, so they've got earnings coming up in Q2. Let's see when that is for MRVL. Yeah, 8/28, so the end of this month. But I'm long MRVL. I think they're great. They've got fabless semiconductor. They're a leading fabless semiconductor company, so they don't own their own fabs. They outsource it, but their chips are used for AI, data centers, 5G, automotive applications. So their strongest differentiator is their custom chips. So they've got partnerships with Amazon, Microsoft, and Google, so all the big guys. So to me, MRVL is a no-brainer. MicroStrategies, with crypto down right now, I love MicroStrategies. Just they're really tied to Bitcoin, and my target's 500, and they're trading at 366. So it's purely valuation. I don't think earnings matter for this company, but it just follows the Bitcoin. And if we look at the chart for these guys for my MSTR, MicroStrategies. Yeah, you can see the move up, then consolidation, bottom end of the Bollinger Band. That's why I like it long right here. So I think it's going to definitely move higher, and there's a floor too, a lot of support. And then I think the last one, let's see. Oh, no, I've got a few more. Okay, ServiceNow, a couple more. Love ServiceNow at 867. With these guys, they've got major partnerships with AWS, Microsoft Azure, Google, and they really enhanced their integration and reach. And I have a $1,000 target. It's at 867 right now, and I've got put spreads on, and I've actually have the 960 calls against it as well on ServiceNow. But love them. And then Palo Alto Networks, cybersecurity. They've got the largest breadth of different platforms. I like CrowdStrike as well, but Palo Alto I love as well. And if we look at the chart on Palo Alto, Pan W. Yeah, you can see a lot of support down here, and we're at the bottom end of the Bollinger Band and trending up. So super bullish chart right here. And they've got earnings coming out on the 18th. So that is tomorrow, folks, and it's after the bell. So you can put on an earnings trade before the bell if you like. But I would definitely do poor man's cover, or no, IV is super high, IVR right now. So I like the put credit spread for Palo Alto Networks. All right, and moving on. We're getting near the end, guys. Super Micro, that's the last one. So let's look at Super Micro, but huge buy. There was a pullback, and I've got 3 poor man's covered calls on. So I put those on last week. Look at IVR down to 0. So good time to buy leaps. That means option pricing is cheap, but they're super strong. Great business. They had mixed quarterly earnings on August 5th, with revenue increasing 8.5% year over year to $5.76 billion, but they missed slightly. They came in at 41 cents per share versus 44. So to me, that's just an opportunity, but they've got important relationships with all the big AI and cloud providers, and their liquid cooling technology on modular servers is really the only game in town. They dominate in that market, and with the data center build out right now, it's gonna boom. But my target for Super Micro is much higher than where it's at right now. Let's see what my target is. I've got a target at 60. We're at 45. So that's a big, 25% move up expected in the short term. All right, guys, be sure and download the free options workshop in the link below. Like and subscribe. Leave a comment. Let me know, are you trading these stocks? And if not, what stocks are you trading and what strategies are you using? If you like this video, watch this next one.